Welcome to All Things Finance in just a few minutes, and in this episode we are going to be discussing investments. So here at All Things Finance, we take a little bit of a different approach when it comes to investing. So a lot of investors tend to get bogged down on analyzing numbers, analyzing all sorts of ratios, analyzing price to earnings ratios, dividend yield ratios. While those ratios are important, it should not be the sole factor in deciding whether to invest in a company. Here at All Things Finance, we like to take a more simplistic approach and look into the companies that we think have potential to grow over the next 20 years. We advise anyone that's listening to our episodes to take that same approach. Investing, especially when it comes to stocks, should be a 10 to 15 or even 20-year horizon. With that being said, we like to look into companies and try to analyze what components of their companies are going to grow exponentially, therefore increasing the stock price over that 10, 15, or 20-year time horizon. A lot of these companies that we're going to discuss, a lot of stock commentators say that you need to wait for the right time to get into the company. And since I'm entitled to my own opinion, I disagree. For example, we at All Things Finance started buying Amazon when it was at $600 a share, and now it's at $3,000 a share, and we're still buying Amazon purely because the smaller companies within Amazon continue to grow at exponential rates. Looking into companies, analyzing balance sheets, analyzing PE ratios only leads to analysis paralysis. We're not saying to put your entire 401k savings into these stocks, but your portfolio should have somewhat of a small allocation to these stocks. So first up is Amazon. So take, for example, Amazon's growing Prime members. Amazon currently has 112 million subscribers paying anywhere from $100 to $120 annually. If you compute that, that's $13.5 billion in revenue before any customer purchases. Although Amazon now has 112 million subscribers, the Amazon subscriber base is growing at a 10 to 12% year-over-year growth. So now moving down to Twitch, Amazon purchased the video game streaming company in 2014, and since then has grown the subscriber base to 40 million users. Now this is a totally untapped market for Amazon. They do very little advertising on Twitch. With the growth of online gaming, Twitch has huge potential to be a money-making machine for Amazon. So what about Amazon Air? So in terms of Amazon Air, Amazon is so dedicated to providing one-day delivery services all around the world, they have now purchased 50 planes and are expecting to expand to 70 planes by 2021. Now, while this will be expensive, the one-day deliveries are just going to drive more and more users to the Prime membership subscriber base. This could also become an additional service business for Amazon. So what about advertising? So now we know that most of the advertising online goes to either Google or Facebook, but Amazon is slowly growing their market share for advertising. Currently, it's at $13 billion in annual revenue with a 40% year-over-year growth. That, in my opinion, is an untapped market because when consumers want to buy products, they no longer start their search on Google, they now start their search on Amazon. So what about AWS? We really should have saved AWS for last because AWS is driving the ship for Amazon. AWS roughly accounts for 71% of Amazon's overall operating profits. And it brings in $35 billion annually with a 30% year-over-year growth. Amazon Go Stores is the testing bed for their cashless store technology. Once they figure out the camera system and the checkout system and perfect that within Amazon Go Stores, they will then roll that out to Whole Foods Market. And Amazon is currently in talks to install their cashless stores in various airports around the US. And last but not least, we have Whole Foods Market. So Amazon purchased Whole Foods in 2017. The company has slowly been integrating Amazon Prime membership with their Whole Foods Market brand, and it has about $16 billion in annual revenue. It's a premium grocer, and it's growing at about 10 to 12% annually. So speaking of Amazon, if you take a step outside the US and think globally, I would want to capture any smaller companies that are emulating the Amazon business model in other countries. For example, Shopify is the Amazon of Canada. If Shopify has the same trajectory that Amazon had, then now is definitely the time to invest in that company. Now let's move down to Latin America. Mercado Libre is another Amazon-like company in Latin America. And the last Amazon-like company that we have is a company called Jumia Technologies, which is in Africa. It's headquartered in Nigeria. And again, they are trying to be the Amazon of Africa. So again, if you're looking on a 15 to 20 year time horizon, these companies may be the Amazon of those other continents. So you might want to look into these companies as well. So that's it for this episode.